So I think we'll do this a bit differently, like the in-front application doesn't allow full screen capture, I guess, so we're gonna make screenshots in Paint, and then we can also show like when I bought and when I sold. So this is Albert's, is like a food chain, I guess. This is one of the mistakes I maybe didn't mention in my previous faults. I literally didn't know anything about most of the stocks that I went into, so I guess that will be one of the first rules that we can also implement while we're at it. So let's see. Okay, for know the company you are investing in, and it's maybe a really important one that I really underestimated myself, but most of the time, like for example, I didn't know why some companies made money when, for example, oil price were going up and stuff, and it's important to see all the indicators for your company to go up or down, or which indicators that work in the section that your company is operating in. So okay, we're back at the example. So about the 30th of May, this is actually one of my good trades I made early on. I think it was kind of lucky, but I actually bought like here at when the crossing of the 5-day average. It wasn't especially crossing the Bollinger Bands or something, but it did kind of had the most volatile part already, and I guess this was lucky on my part because I didn't use this indicator back then. But as you can see, I actually sold it on this day here. It's like one of perfect trades you can make for short-term swing trading. Like this is like maybe a week and a half again, and I think I made about 150 euros on a 200 investment, so like 77% return almost. This is one of the better, like the ideal trades that you want to make. What I want to touch on this is like I could have kept it longer, of course, but as you can see, like it went downwards and then back upwards, and this is kind of a well-known trend in bullish patterns, and it's like a bull flag. Like you have an upward trend of bulls, like green candlesticks, which are mostly like followed by two bearish sell-off days, like people taking their money because of the late run. But then again, there was good news or something, like it was obvious that this was not just a fluke, but the market actually starts rising again to a new level, breaking some support lines probably here and there. So this was actually really good trade that I could have kept longer, or I could have bought back in this moment or something. Like if this doesn't cross the middle, which is the VWAP, it's like a volume measurement line, and it's the center of the Bollinger Bands. So if this doesn't cross that and it bounces back, it's actually a good sign that the stock probably is going back up, and it was still undervalued before. So I potentially could have made a second trade here and there and cashed out here or something. Like there was a lot of things to do, but this is actually one of my good trades. So I guess this doesn't have a lot of mistakes made. Like the only ones I didn't know, this was pure luck, of course. But if I would have made one, I probably would have like a stop loss here or something in the future, instead of probably the more aggressive ones I had. I guess would be more like that or something. Now I don't know what the leverage was on that turbo, but yeah, we'll go on to the next example. So this is my third turbo trade, which went well, which didn't went well. This one was a Tweaka TKH turbo. I put in 120 euros and I lost it all, I guess. But this is a good example of why you should like never. I'm glad this is early on. This good example of why I should never like buy too aggressive turbos. This is one of my key mistakes I made so many times throughout the history of my account. So the 30th of May, I actually bought this stock. Let's see, it was somewhere here, and I think my stop loss was exactly like it was the most aggressive turbo. Wait, so I bought somewhere in these days, and I think my stop loss was something like that. And as you can see, like, I bought really aggressive. This was a good call, a good time, certainly a good time to buy in, because it was like a narrowing of the Bollinger Bands again, and as you can see, a really good run afterwards, a really good expansion. But unluckily, my stop loss got hit in the morning, I guess, before the run went, and yeah, I lost so much money out of here. You can't imagine how much money this makes if you run it out completely. You can't really predict such a good runs, but sometimes they do happen, and you could profit so much on them. And it's kind of sad that I lost out on so much money because I just bought too aggressive. Like, if you buy a stop loss a little bit more further or something, it's still a good profit, but it would be so much safer. And even though if it would still go downwards like here, you have still margin left to sell or something. Like, you don't completely lose your turbo. So this is one of the good examples why it's always important to not buy too aggressive turbos, unless you like BTBing it, of course, but then you have to predict it really well. Like, if, for example, your stop loss is really here or something, this would have made you immense amount of money. But yeah, let's go on to the next example before this gets too long again. So we're here at the next example I want to talk about. This is Renault. This is like 30th of June again, like the same time. There were like merger talks with Fiat, I guess, so there was like a really volatile market. Really, people didn't know what to expect, and I bought a long turbo right here. As you can see, in hindsight, this was like a perfect buy-in moment, and I decided to buy out quickly, and I think I sold here on this day. So it was like 5 days, like a week I hold my turbos, and I think I made about 90% return on investment, so it was also like a pretty good trade. I don't know if like I can make a rule of this. The only thing I can think of is follow the news, like actually try to figure out what is happening with the company, how is the future looking, because an important factor about stock markets is that the pricing is like what the future is thinking it will be, and the future is uncertain, so pricing is always can be corrected, or can be like corrected in both ways. It can go way up when, for example, earnings are out there, or it can go way down when certain news makes the media. So it's you gotta keep in mind that the stock market's price is actually like a future sight in how the stock is worth and how people think it will be worth. It's like a consensus, so follow the news of your companies. This is maybe difficult to do in the beginning, but once you get like used to it, what kind of pattern companies have, what kind of rhythm they have when they make the most money, why certain branches of the company are more important than others, you can read in between the lines and just see, okay, this is happening with this company, so probably I shouldn't invest in next week until I hear some other news from it or something. So this can be also a good rule, I guess, to implement. So I actually wanted to do Volker Wissels next. It was like a really cyclic company, and which I made a good profit of, but I guess they went off the public stock exchange, so they're not viewable anymore. So I guess I'll do it with this example. This is Aperam. I think I had the wrong ticker, but it's like the same thing is happening here. So I bought my stocks around here, around here, and I sold them here. And as you can see, like a lot of companies are kind of cyclic or something. They always like go in and go between and forth certain support and resistor lines. So I guess one of the rules I wanted to make here and with Volker Wessels, which was even more clear, is that especially when you're beginning, try to invest in cyclic companies with turbo trading or swing trading for short term or medium term foresights, because they're easier to predict and easier to have potential profits on. So I guess I'll make that one of my rules. It's like try invest in cyclic companies, easier to predict. Yeah, this is in line with what I was talking about. It's all about trying to see, okay, what's the future gonna be, and if by some means some bad news came out and it was like a downtrend here and or here and here, and you know it's like, okay, this is close to the support line, it's a good opportunity to buy again, and hopefully like you can sell them here and realize that it doesn't go up too much further than that, because that's kind of how stocks work. They always go up slowly, and it's not all like Tesla, which I will show next one, that this is actually like one of the few star or unique stock trades markets that happened, because it kind of exploded out of not out of nowhere, but with too much hype and too much people really want to buy Teslas at some point, Tesla stock. So let's go to the next example. So I wanted to show quickly, I bought Tesla stocks back in the day. Unfortunately, I didn't keep them for very long, but if you can imagine, I bought 5 Tesla stocks the 12th of June. It was like $222 at that point. I was thinking it will be 350 maybe, like I was already really optimistic about Tesla, but imagine if I kept it until the $1,000 it is today, I would barely have lost any money on my account. So sometimes long-term investments do, or like stocks do work out in your favor, especially in the long term. Like it's like theoretically proven that all stocks eventually go up. Like how long you will, if you hold them all long enough, you will make profit of it. But yeah, that's not really what I wanted to show here. That's just how sad I am that I didn't keep the Teslas. Oh well. So I actually bought also some Tesla stock turbos, so I guess I really had some luck there, and as you can see I bought it like at the $200 market, or 200 euro, I don't know in which value this is, in currency this is. But as you can see, I sold it a few days later, I think around here or something. I really made a good profit already, and yeah, Tesla stocks were really good back in the day to invest in, apparently. I didn't know that, or I was just one of the fanboys that saw it happening, but as you can see, it did some kind of weird things everywhere. Like Tesla stock is not just a normal stock, for example it's just not really something too common, like falling so much in just one day, just bad news or something, or like Tesla got so much shit back in the day. But anyways, yeah, I guess a rule I can make is follow the hype, but don't like being a sheep, so I guess I won't make this a rule. Let's see what the next step is gonna be, which I can make a rule for. So the next one is a really good trade I made. It was like a 2-day trade or something. It's on Umicore long. So I bought my trades, my turbos right here, when it crosses the Bollinger middle band, the VWAP. And I sold here, so as you can see, I kind of sold perfectly. Like, this is how you want to trade, I guess, in my turbos, in my opinion. They cross a good indicator that stock is going up, and then you sell it at the top of the Bollinger Bands. Like you really want, this is safe betting, like not safe betting, but more thought of betting, like when the price is jumping in between the Bollinger Bands, like going this. It's really more easy to predict where the stock is going and make little profits. Like this made me 90% return on investments on a 700 investment. So yeah, I really made a lot of money out of there. And I also like bought some extras. Oh no, I had a 1,800 stake and I made 2,500, so I got pretty good money there. Yeah, so I think one of the rules I want to add for that is use the indicator, follow the indicator. They are usually right. So what I mean by that is, if there's still bullish signs and bullish indicators going for you, you should probably keep on to your stock. If it's going bad, like if it's not crossing your stop loss already, but usually they do actually go in the direction you think they're going. Maybe not on the time frame you're thinking, but sometimes you gotta grip those tight in your hands and don't make the sale too quick. And sometimes, like this time, you have to take your losses, your wins quickly before they turn into loss again. They could have turned into loss here, but okay, we'll see in the next one, maybe a better example.